As we end the winter, I want to briefly review where the Raleigh housing market stands after 2011 as we look forward to 2012. And I'll lean on data based on Stacy Ann Finson's Triangle Residential Realty Report. We want to talk about inventory levels, our current demand, and the looming question marks for this next year. First, inventory is down nearly 25% over the past year. This is the first time in 5 years we have had a drop in inventory. Even more significant, this is the lowest inventory has been since our peak in 2006. Resales are down near 25% this last year. New construction is down near 20%, now down 60% from the market peak. Areas of far oversupply dropped from 50% to 33%, so less areas have far too many for sale signs up in their neighborhoods. Yet this leaves 1/3 of our market needing a sizable price adjustment. Unfortunately, luxury homes are still in an oversupply, so we still expect prices to drop here as the abundance of sellers fight against each other to attract the lower amount of shoppers available. Overall, 2011 inventories were at a 6-month supply, which is a step better than 2010, which was 7-month supply. Of course, 3 or less is a seller's market, 8 or higher is a buyer's market, 5 or 6 is pretty stable. So right now, some areas like North Raleigh are under 250,000 and Wake Forest under 150,000 are seller's markets. Meanwhile, Northeast Raleigh over 150,000 is a buyer's market. So we anticipate, in summary, seeing prices firm and some prices slightly rising in the more demanded locations and more progress towards stability in those sliding areas. Second, demand is steady overall. The first part of our year was quite slow as we struggled through the recovery from those disappearing tax credit incentives a year ago. But we had quite a lift in the final part of the year. Homes going under contract increased 16% in the fourth quarter, and contracts this year have increased 30%, of course, compared to a year ago, which was struggling with that overly sluggish tax credit recovery. But still, at the least, this anticipates a stronger year. At the same time, the pickup in demand is primarily focused on central areas and home prices near or below the average home price, which is $250,000. At the least, with the lower prices and the lower rates, people are trying to move as close to work as possible. Possibly even more, though, there might be a migration happening from outlying areas to those central locations which are close to the epicenters for work. For example, buyers are choosing North Raleigh over East Raleigh, Cary over Holly Springs, and Wake Forest over Youngsville. It seems like people are now making that move that they had anticipated making in the next couple years. They just can't pass up the low rates and low prices. Overall, we anticipate the strongest market we've seen since our peak in 2006, especially in those central locations and at or near or just below the average priced home at $250,000. Third, there are some wildcard issues we're watching. First, we expect rates to stay low for most of this election year, but a big swing in rates could cause buyers to hesitate and cut back that demand. Second, we don't know where rent rates are going to go. Although mortgage rates and prices are down, rents at apartments have increased 10% over this past year, and this should continue to be a great motivation for people to buy a house and lock in that low payment. Third, after repairing the foreclosure process, big banks have been rumoring that they're now ready to release a lot of those homes that have been delayed for foreclosure. Our current foreclosure rate is 10%, so if we see a big increase in foreclosures, that could compete more with the ordinary resales and provoke sellers to have to drop their prices. Fourth, our workforce and unemployment rate has been pretty stable this last year, not moving more than 1%, but a big change in jobs would quickly impact demand for housing. Finally, buyers are still pretty fragile with their high expectations. They're vulnerable to little changes and rumors here and there, so expect the unexpected. During these uncertain times, with as many opinions as voices, thank you for joining me.